Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Forex Kickstart video where I take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, and sterling versus US dollar from a technical perspective. Today's date is October 24th, 2024. Let's get started. The initial jobs claims came in stronger than expected at 227. They're expecting 242,000, that is, and that has helped to push the US dollar a little bit higher after trading lower to start the U.S. trading day. Yields are still negative on the day, with the 2-year down at about 2.4 basis points and the 10-year down 2.2 basis points, but they are off their lowest levels as we speak. So let's take a look at the euro versus U.S. dollar from a 4-hour chart, see what the charts are telling us. In trading yesterday, the price did move below the target at the low price going back to, I guess, the end of July. That level came in at 1.0776. That's this low right here. And we saw the market increase momentum to the downside, but we fell short of the next target down here and started to rotate back to the upside. In trading here today, we did try one more time to get below that level, but could not sustain it again, and we started to rotate back to the upside. That move to the upside has taken the price back toward the low price that we saw from last week's trading. Again, this is the 4-hour chart here, so each of these dashed lines represent a week of trading. So we moved up toward that level right here and found willing sellers so far against that level. That level comes in at 1.08103. We're going to need to move above that level to give the buyers more confidence, have traders perhaps looking back up toward the 200-day moving average, 61.8% retracement, and swing area that was defined going back to this period right here where we had support, resistance, and then break to the upside right here. So we broke below that level, and then what do we do on Monday? We found resistance sellers against all that technical stuff right here and rotate to the downside. But first things first, we need to get above the 1.0810 level to increase the bullish bias. Alternatively, if we break back below the low price going back to the end of July right here, that would give the sellers more confidence to push to the downside. So the battle going on between support and resistance in the short term for the euro versus US dollar. Let's take a look at the dollar versus yen next. And again, we'll focus on the 4-hour chart at least to start. And we see that in the 4-hour chart here, the price did move above this swing level right through here, going all the way back to the month of, I guess that's May, in trading yesterday. Not only that, we broke above the 200-day moving average yesterday right here, broke above this swing level right here. This was a floor, and then we rotated to the downside here. So that level was key. We moved up toward the 61.8% retracement, got within about 20 pips of that, and then rotated to the downside. And trading here today, we came back to the old floor / ceiling right here. And we did break a little bit below that level. We are currently back above it, currently trading at 152.105. So we're going to need to get below the 151.93.7 level and stay below that level. It's really around the 90 level. Stay above that level to, or get below that level to increase the bearish bias. Then we'll look toward the 200-day moving average, which again we broke above yesterday in yesterday's trading. Finally, let's take a look at the sterling versus US dollar. Again, we'll look at the 4-hour chart for this currency pair. And in trading this week, we've seen the price move below the 100-day moving average, break back above it, move back below it. In trading yesterday, that was more bearish, and we saw momentum continue to break below this swing level right through here where we had ceiling here and then a floor here before moving to the upside. So getting below that level in trading yesterday, as you saw increased momentum to the downside, but that was reversed in trading here today when we moved back above this level at 1.2938. We saw the sellers turn to buyers, and we have since moved back above the 100-day moving average now with the initial jobless claims. We're starting to wonder whether we whether we should be above this 100-day moving average or move back below it. If we move back below it and then move below the 61.8% retracement, then all bets are off as far as the upside momentum goes. We did trade above and below the 100-day moving average earlier this week. Now question is, can we hold that 100-day moving average? If we can, then we'd look toward the this swing area right here near the 130 level, a nice natural level as well of resistance. Get above the 130 level and it opens the door for further to the upside. So that's my technical look at 3 of the major currency pairs to kickstart your trading day. Hear my voice say it to you. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.